Hey everyone, welcome back for another deep dive. Today we're tackling ETFs, specifically how technology has taken them from, well, pretty basic to seriously game-changing. Think of it like this.
Ooh, an analogy. I like where this is going.
You know how everyone has that first car story? The one that got you from point A to point B, but it wasn't exactly turning heads?
Yeah, I definitely had one of those.
Early ETFs were kind of like that. They worked, got the job done, but weren't super exciting. But then technology happened.
And now we're talking high performance, sleek, powerful, like trading that clunker for a sports car.
Exactly. So a reliable ETF got a serious upgrade. But how did we go from basic to supercharged? Was it just everything getting faster? Trades, data, the whole shebang?
Speed definitely played a huge role. I mean, the financial world was a completely different beast back in the 90s when ETFs first hit the scene.
Right, back when things moved at a glacial pace.
Exactly. Things were much slower. But today, with the constant flow of data and the way we trade now, it's a whole new ballgame.
Okay, so speed is key. But what about high-frequency trading? That's going to be part of this shift, right?
Absolutely. High-frequency trading, or HFT for short, is a perfect example of this change. It's gone from sending a letter to firing off a text. Instantaneous.
And with HFT, it's algorithms making lightning-fast trades. Okay, so HFT brought the speed. But what about artificial intelligence? Everyone's buzzing about AI taking over everything. How is it impacting ETFs?
Well, think of AI as a super smart robo-advisor for your ETFs.
So it's more than just some program randomly picking stocks.
It's way more sophisticated than that. We're talking about AI analyzing massive amounts of data in real time.
Okay, but what kind of data? And how does it actually help with ETFs?
It's looking for market patterns that humans could never spot quickly enough. You know, things like company earnings, breaking news, even social media sentiment.
Wow, social media. I never would have thought of that.
It can even take things like weather patterns into account, especially those that could affect specific industries.
So it's building a whole picture.
A complex one. And then it uses all that information to constantly adjust ETF portfolios for better performance.
So it's like having this invisible financial expert working 24/7. Okay, so AI's got the speed and the data crunching down. But what about blockchain?
Ah, blockchain. A lot of people immediately think crypto and Bitcoin.
Yeah, I definitely did when I first heard about it.
It's understandable, but blockchain is so much bigger than just cryptocurrency. It's really a secure digital ledger technology.
A ledger, like an accounting book?
Kind of. But in this
Okay.
case, it's a digital one that's revolutionizing transactions of all kinds.
Okay, so how does it connect to ETFs?
Well, it impacts ETF trades, for one thing. With
Mhm.
blockchain, you get increased security and transparency, plus way faster transaction speeds.
Okay, that makes sense. But cutting out the middleman like that, doesn't that raise some concerns too? I mean, who's making sure everything runs smoothly, no risk of, hacking or errors?
You're right to be cautious, but that's where the design of blockchain is key. It's not just removing those intermediaries, it's replacing them with this robust system.
Okay, but what kind of system?
It's a decentralized network that verifies each transaction across multiple computers.
Ah, I see. So it's like a checks and balances system built right in.
Exactly. This makes it incredibly difficult for anyone to tamper with anything. And the transparency actually helps with oversight, since, in theory, anyone can audit those transactions.
That's really interesting. So it's secure, but also kind of like a public record? Okay, all this tech sounds pretty impressive, but what about us regular folks?
You mean those of us who aren't Wall Street wizards?
Yeah, exactly. Personalized investment advice used to be for the wealthy. Has technology changed that at all?
Oh, absolutely. We've seen this massive shift towards democratizing investment, and robo-advisors have been a game changer.
Robo-advisors, so like those AI-powered ETFs we were talking about.
They use similar algorithms, but instead of just managing an existing ETF, they actually build custom portfolios for anyone, regardless of their financial expertise.
And how much money they have to invest.
Exactly. So it's like having a personal financial advisor right there in your pocket without the hefty price tag.
No more needing a financial expert to decode all the complicated stuff. Sign me up. But seriously, how do these robo-advisors actually work? Do they, ask you a bunch of questions first?
That's exactly it. You usually go through a quick onboarding process where it asks about your financial situation, your goals, and how much risk you're comfortable with.
Okay, so it's figuring out my risk tolerance. What else does it ask about?
It might ask about your timeline. Are you saving for retirement, a down payment on a house, something else entirely? And based on your answers, it'll recommend a diversified ETF portfolio tailored to your needs.
Wow, so no more overwhelming spreadsheets and financial jargon. But speaking of being overwhelmed with everything being mobile these days, how much of this ETF stuff can I actually manage from my phone?
Pretty much all of it. Convenience is king these days, and mobile apps have made ETF trading and management incredibly accessible.
So I can buy and sell, track my portfolio, everything.
Yep. You can even rebalance your portfolio right from your phone.
Wow, talk about having an ETF command center in your pocket.
Yeah.
So we've covered a lot of ground here: speed, AI, blockchain, robo-advisors. It's clear that technology has brought a lot of benefits to the ETF world.
Absolutely. It's made investing more accessible, more efficient, and way more customizable than ever before. Just imagine trying to manage a complex portfolio using, like, paper spreadsheets.
Yeah, that sounds like a nightmare.
Technology takes care of all that heavy lifting for us now.
That's pretty incredible when you think about it. So before we wrap up this part of our deep dive, what's the one key takeaway our listeners should remember about the tech-driving ETFs today?
I think the main thing to remember is that technology has revolutionized ETFs. It's made them far more powerful and flexible than they used to be.
So it's not just about basic market exposure anymore.
Nope. You have speed, sophisticated analysis, customization, all sorts of opportunities that used to be out of reach for most investors.
So we've gone from basic market exposure to AI-powered portfolios, blockchain security, robo-advisors, and we can control it all from our phones. It's been quite a journey. But before we get ahead of ourselves, let's take a closer look at how all this tech is changing the types of ETFs available.
That's a great point. It's not just about how ETFs are managed anymore, but the sheer variety they offer.
So it's not just your basic stock market ETFs anymore. What other options are out there? So it's not just your basic stock market ETFs anymore. What other options are out there?
You hit the nail on the head. It's like, remember that car analogy? Our basic sedan?
Yeah, the one that got a tech upgrade.
Well, now we've got a whole lineup. Need an SUV for hauling cargo.
Okay, I'm listening.
There's an ETF for that. Want a sporty convertible? There's an ETF for that too.
Okay, less about cars, more about investments. Give me some concrete examples of these new ETF types.
All right. How about thematic ETFs? They focus on specific trends like renewable energy, artificial intelligence,
That makes sense. Anything else?
even the metaverse.
Hold on, the metaverse. So I could invest in companies building those virtual worlds through an ETF. That's wild.
It is, and it shows how ETFs are evolving to keep pace with all this new tech.
Yeah.
And then you've got ETFs focused on specific investment strategies, like ESG investing, for example.
ESG.
Yeah, it stands for environmental, social, and governance. So it considers those factors when making investment decisions.
Right, so if someone's really into sustainability, they could find an ETF that matches their values. But it's not just stocks, right? You mentioned something about bonds before.
Exactly. There are ETFs for bonds, commodities, real estate, you name it, even currencies. It's
Yeah.
incredible how much choice investors have now. And it's all thanks to tech, really. It's made it possible to create and manage these increasingly complex and specialized ETFs.
Okay, so more types of ETFs, they're faster, smarter, more secure. But what about the downsides? All this tech-driven evolution, it can't all be good, right?
You bring up a really important point, and honestly, you're right, there are some potential risks to think about. For one, the speed and complexity of HFT. Well, it can make the market more volatile.
So it's like, going back to our analogy.
It's like our sports car. Great for handling those tight corners, but you need a skilled driver behind the wheel or things can go wrong.
So it's powerful, but you need to know what you're doing. What else should people be cautious about?
Well, with all this automation and data flying around, there's always a chance for errors or glitches, like those flash crashes we've seen in the market.
Those are pretty scary.
Those are a prime example of how things can go haywire when technology's involved.
That's a little unnerving. Makes you wonder about the safety nets in place.
And here's a crucial point. Even with AI and robo-advisors, there's still risk involved with investing. No technology can guarantee returns or predict the future perfectly.
So it's a tool to help us navigate, but it's not a guarantee that we'll reach our destination.
Precisely. It's like using a GPS. It can guide you, but it can't prevent every traffic jam or wrong turn.
That makes sense. So for someone using a robo-advisor, for example, should they be double-checking its work, just to be safe?
Doing your own research is always a good idea. You need to understand the risks and not just blindly trust technology. Robo-advisors can be fantastic for building a diversified portfolio, but you should always know what you're investing in and why.
That's a really important reminder. Blindly following any advice, whether it's from a person or a piece of tech, can be risky. But even with these risks, it seems like technology has brought a ton of benefits to ETFs, right?
Oh, absolutely. It's
Yeah.
made investing more accessible, more efficient, and more customizable than ever before.
So as we wrap up this part of our deep dive, what's the key takeaway for our listeners? What should they remember about all this tech driving ETFs today?
I think the biggest thing to remember is this. Technology has undeniably revolutionized ETFs, but it's important to approach all these advancements with both enthusiasm and a healthy dose of caution.
Right, so embrace the opportunities, but keep those risks in mind. And always remember, knowledge is power when it comes to investing. Speaking of the future, that's where we're headed next. We've seen how tech has changed ETFs so far, but what about the road ahead? What can investors expect? What does the future hold?
Well, the future of ETFs is full of possibilities. And one trend we're seeing is this rise of hyper-personalization.
Hyper-personalization. Okay, I'm officially intrigued, but what does that even mean when we're talking about ETFs? It sounds pretty futuristic. Hyper-personalization. Okay, I'm officially intrigued, but what does that even mean when we're talking about ETFs? It sounds pretty futuristic.
Think of it this way. Imagine ETFs that are tailored to your specific financial goals, your risk tolerance, even your values.
So not just picking an ETF that tracks, say, renewable energy or something.
It's way more specific than that. We're talking about ETFs that are practically built just for you.
So instead of me choosing from a list of like pre-made ETFs, the ETF itself is customized. How would that even work?
AI and machine learning are going to be the architects here. They'll analyze your financial data, understand your goals, even factor in things like your ethical preferences or your long-term plans.
So they're really getting to know me.
Exactly. And based on that deep dive into your finances, they'll craft a portfolio of underlying assets that aligns perfectly with your unique circumstances.
It's like having a bespoke suit, but for my investments. That's pretty mind-blowing. But, access is a big thing for me. Will this level of personalization be available to everyone? Or just people with, a ton of money to invest?
That's a great question, and accessibility is definitely key. Another exciting area that's opening things up is fractional shares in ETFs.
Fractional shares.
Hmm.
So instead of needing to buy a whole share of an ETF, which can be pricey, you could buy a fraction.
That's the idea. It could open up ETF investing to a wider audience, especially younger investors who maybe don't have a lot of capital to start with.
I love that. Makes investing more inclusive. So how would that work exactly?
Well, fractional shares basically make it easier to dip your toes into the ETF world without needing a huge initial investment. It also allows for more precise portfolio allocation, even if you're working with smaller amounts of money.
So hyper-personalization and fractional shares. That's making ETFs more accessible A&D, tailored to individual needs. What other trends are we seeing on the horizon?
Well, we're going to see even more use of blockchain technology, and it's going to get even more sophisticated.
Yeah.
Remember when we talked about the security and transparency benefits?
Yeah, blockchain seemed pretty impressive.
Well, in the future, it could lead to even faster settlement times, increased efficiency, and even lower fees for those ETF transactions.
So even more perks from blockchain. Sounds like a win-win.
Mm-hmm.
But with all this innovation happening, are there any potential challenges or concerns we should be thinking about?
You're right. Rapid innovation always comes with challenges. One of the biggest ones is making sure these advancements benefit all investors, not just a select few.
That's a really important point. We don't want a two-tiered system where only the wealthy can access the best ETF tools, right?
Exactly. It's about making sure that democratization of investing we talked about extends to these future advancements too. Everyone deserves the opportunity to benefit.
I totally agree. Are there any other challenges on your radar?
Regulation is going to be key. As ETFs become more complex and tech-driven, regulators are going to need to adapt and make sure investor protections are in place. It's a balancing act, really.
Between fostering innovation and protecting people.
Exactly. You don't want to stifle progress, but you also need to safeguard investors.
Finding that sweet spot can be tough. So, as we wrap up our deep dive into ETFs, what's the one key takeaway you want to leave our listeners with about the future?
The future of ETFs is bright. That's the main thing. Technology is driving incredible innovation and creating opportunities we've never seen before. But it's crucial to approach these advancements with both excitement and caution.
So, don't get swept up in all the hype, but don't be afraid to explore either.
Exactly. Do your research, ask questions, and make sure you really understand the risks as well as the potential rewards.
It's like anything else, knowledge is power. Well, that's all the time we have for today's deep dive into ETFs. It's clear that the world of ETFs is constantly changing, and it's an exciting time to be an investor. Thanks for joining us.